Good morning, hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao and I'm here to help you navigate today's trading session with actionable trading strategies, sectoral trends and all that you need to understand before the trading session begins. Of course, we'll also be addressing your queries during the show, so please keep commenting on our live feed. We will have your questions addressed towards the latter half of the show. Before we begin, let's see what the global handover looks like. US stock futures slip overnight, even as Wall Street closes the week higher. The S&P 500 and Dow Jones end the holiday-shortened week with gains. Asian markets edge lower, meanwhile, amid widespread protests in China over its zero-COVID policy and calls for President Xi Jinping to step down as cases mount across cities. The SGX Nifty suggests a negative start, however, for our own market. European markets were muted on Friday to close an upbeat week as the US Fed Reserve's latest meeting minutes added to expectations that monetary policy tightening may slow down. Meanwhile, Sensex scales to record highs. We tell you how to make the most of your investments. Stocks in the spotlight today are Hero MotoCorp, IEX and jkcement. All right, let's get going and bring on board our first guest on the show today. It's my colleague Kaizad Adajania from Moneycontrol. Thank you, Kaizad, for taking time out and chatting with us this morning. I'm sure with the market scaling to new highs, you guys also get a lot of questions, queries and feedback about what to do with their investments. What is the best way right now to maximize all that you've invested in across different assets, especially equities?
Well, Karunya, hi, good morning, and thanks for having me on the show. See, to be very honest, it would not be a very wise thing to sort of, book your profits, and in the sense that, just take out everything en masse from equity markets just because markets have touched an all-time high. But yes, I mean, you can selectively take money off the table if, let's say, if your equity allocation, has gone way beyond your stated allocation and your risk profiles. So, for example, let's say if you have been saving for a financial goal and you are nearing your financial goal, let's say if if your financial goal is, let's say, coming up 6 months to 12 months from today, and you are already very near to your goal, and markets have risen, your funds have done well, so you can take some money off the table. But at the same time, you should continue your SIPs because there is always a risk of reinvestment. What happens is that when people get carried away by high markets, rising markets, and when they take money off the table completely and entirely, what are they going to do with the money? It's going to sit in the bank account, or you might reinvest it at equally high levels or even at high levels because you don't know where the markets are going from here today. So why do you want to take out all the money from the market and just bother yourself again with the risk of reinvestment? Rather, you can selectively take money off the table depending upon how much money you need, let's say 6 months or 12 months down the line, and let your SIPs continue as they are.
Okay, but I'm sure you guys have also collated the views and thoughts of many market watchers as well, because right now there is the big question that has come out of the market momentum and the market mood is whether to buy, sell or rebalance. What are experts talking about?
Most of the experts obviously are unanimous in their view that you need to take this opportunity to rebalance your portfolio. I mean, you need equity and you need debt and you need gold and you need a little bit of international equities in your portfolio because that's the asset allocation that you should be targeting. Now, how much you should invest in equity, how much you should invest in debt also depends on your risk profile. Suppose, let's say if you are in your early 20s, you should be overwhelmingly invested in equities and little in debt because your employees' provident fund, I'm assuming that you would have your public provident fund. So all those investments will take care of your debt allocation, which means that that leaves a majority chunk of your monthly income to be invested in equities. So irrespective of where the markets are, you should be investing significantly in equities. But let's say if you are in your 30s and 40s, where you would have a little bit higher allocation to debt as per your stated risk profile. And in a market like this, if your equities go beyond, let's say 60% or 70% or 80%, then you should rebalance your portfolio and come back to your stated allocation. But in no ways should you just randomly stop all your SIPs and just sit on cash. That's obviously not the right way to go about it. And yes, I mean, if you have some surplus cash, then it's as good a time as any to even start a fresh SIP also. I mean, there's no stopping you from starting a fresh SIP, but keep in mind your overall asset allocation and be honest towards it.
You know, since you talk about asset allocation right now, other than equities, where else do you think one can invest to add more value to their investments and their overall portfolio?
You can obviously, it's a good time to invest in fixed income funds also, in debt funds also, because, you know, with the way the interest rates have risen, you know, there aren't too many rate hikes now coming our way. There could be a few, couple of rate hikes, one rate hike, maybe two rate hikes, and then the interest rates are going to remain steady. And then they're going to fall, let's say, in after a year or so. So it's a good time for investors to start now thinking about, let's say, midterm to slightly long-term, you know, bond funds. There are so many target maturity funds also coming up, you know, that lock your money away for some a good amount of years at these kind of yields. So debt is a good instrument. Of course, you know, you need to have a little bit about, let's say, 5 to 6% in gold and silver also. And then international equities, you know, whenever the opportunities open up, whenever I know that, you know, the overall limit has been shut for now close to a year, but there are some funds off and on again that give you an opportunity to invest, you know, internationally, depending upon the headroom that it's available to them. So you can also invest in some of these international funds also. But yes, apart from equity, you need to have something in fixed income, you need to have something in gold, you need to have something in international equities also.
Okay. All right. Thank you so much, Kaizad, for joining in and for sharing your views on the market and how people should sort of stay invested in SIPs, and not just SIPs which are equity based, but also look at debt and fixed income funds as well. At this juncture, gold also looking quite resilient. Let's move right on and bring on board our next guest, Rajesh Palvia, to talk technicals. Morning, Rajesh. What's the trade setup telling you? What kind of a trading day are we set for?
Morning, Karan. So it's a very strong setup which we are seeing on both the indices, Nifty and Bank Nifty. And looking at the overall setup, we feel that, you know, this upward momentum is likely to continue further higher from the current level also. And we are expecting Nifty to inch up further higher towards 18,650 to 18,700 in the continuation of this uptrend. So overall, buy on dips is the strategy. We have witnessed huge short covering action in the previous trading session also. And looking at the setup now, the base is shifting higher. Nifty is now holding good support area at around 18,200, 18,300 zone. So until Nifty not breaks below 18,300 level, it will remain on the upside only, and trend will remain on the bullish side. So buy on dip should be your strategy. Trail your stop loss higher towards 18,300 for upside target of 18,650 to 18,700 for Nifty. And if you talk about the Bank Nifty, it's clearly in the uptrend. It's enjoying all-time high trajectory, and looking at the setup, we expect this Bank Nifty to continue its upward momentum towards 43,500, even 44,000 in the continuation of this uptrend. So all the constituents of Bank Nifty is also showing good buying interest. So buy on dips is the again strategy in the Bank Nifty also. Until Bank Nifty not slip below 42,400 level, one should remain on the long side of the trade. Keep your stop loss on the higher side towards 42,400 to for upside target of 43,500 for the Bank Nifty also.
Okay. All right, then. Let's talk about some stocks as well, which are likely to be in the spotlight today on back of news triggers. The first one, of course, is Hero MotoCorp. What they're essentially looking to do is increase their prices in December 2022 for two-wheelers, which includes all the segments that they have. The price increase could be to the tune of 1,500 rupees. It is likely to help offset any further cost impact on the company and also aid margins trajectory going forward. But Rajesh, let's talk about the technicals of a Hero MotoCorp and what does that tell you?
So currently, if we look at the overall setup for Hero MotoCorp, it's again in a broad consolidation range. But looking at the near-term setup, some strength is visible on the stock. Stock is now holding above its a 50-day moving average, and it's respecting its 200-day moving average also. So looking at the near-term setup, we feel some momentum on the upward side can be seen. On stock can inch up further higher towards 2750 to 2780, which is the immediate hurdle which we are seeing on the near-term basis. But overall, if we look at the positional perspective, if stocks manages to cross about 2800 on the weekly closing basis, then there would be a trend reversal of the stock, and we can see furthermore upside momentum on the positional basis towards 3000 also. So those who are looking for positional perspective, they can buy and accumulate the stock, keep a stop loss of 2600. On the breakout of 2800, they can add further more position, and for upside target of 3000. For trading perspective, keep a stop loss of 2640 and upside target is 2780.
Okay, all right. The next stock is India Energy Exchange. In fact, we're getting a lot of comments as well on our live feed right now on IEX. They've got a board approval for a share buyback close to 100 crore rupees. The buyback price is 200 rupees a piece, and they're looking to sell maximum. They're looking to buy back a maximum of 49 lakh shares via this buyback offer. Right now, the stock is perched at 150 and 200 is the offer price. What kind of a momentum or an action do you foresee on this counter today and for the next few days?
So stock was underperforming, and we have seen huge corrective action in recent past. But looking at the near-term setup, some buying action has been seen at the lower level. Stock is trying to form a base at around 140 level. Now looking at the price action, now stock is managed to hold above 50-day moving average, which clearly shows some strength is coming back on the stock on the near-term setup also. Looking at the buyback announcement, yes, some traction on the buying side can be there. Stock can move further higher as stock has given a breakout of its almost 15 to 20-day consolidation range. So looking at the breakout, we are expecting that 165 to 170 should be the target on the higher side. So those who are holding trail stop loss at 142 for upside target of 165, 170.
All right. Okay. And the third and final stock on our list for the day is jkcement. They've increased cement grinding capacity of 2 million tons per annum. Their subsidiary jkcement commences cement grinding capacity at the new manufacturing facility, which is based in Uttar Pradesh. Now, jkcement has seen good upward momentum last 1 month. In fact, not just 1 month, more than a month actually. It's been steadily going up. Is that trajectory going to continue?
Yeah, very strong price setup for jkcement on the near term as well as on the short term also. Even if you look at the daily setup, stock is now forming rounding bottom formation, and almost it has given a breakout of its September swing high. So looking at the weekly as well as on the daily chart, we expect that this stock can move further higher towards 3300 to 3400. On the weekly chart also, we have witnessed an inverse head and shoulder pattern also. Breakout is still awaited. So once stock crosses about 3040 level on a weekly closing basis, then this breakout confirmation will be there. And then possibly stock will move further higher, and 3400 could be the possible target of this breakout. So one should remain invested, and even in the dips also one can add the position. Our stop loss for jkcement at the current juncture is around 2850 level, and we are projecting target of 3400.
Okay, all right. Let's address some of the comments and queries that are coming up on our feed as well. The first one I want to bring up is from Vignesh. He's asking, what is the view on Samvardhana Motherson Sumi? Can we accumulate for a target of 100 to 105 rupees? What do you think, Rajesh?
So we have seen underperformance in Samvardhana Motherson Sumi, and now looking at the near-term setup, some buying action has been there. On the weekly chart, stock managed to give falling trend and breakout. So looking at the breakout on the weekly chart, we expect furthermore upside momentum, but 105 is too far from the current level. Yes, in this uptrend, stock can move further higher towards 80-85 zone, where one can book profit, because it's again 200-day moving average for the stock, and some supply pressure we can see around those level. So in this up move, we are expecting 85 level. Even at the current juncture also, one should follow the stop loss of 65.
Okay, all right. Looks like 105 levels could be elusive for some more time, according to Rajesh. Moving right on, Abhilash is writing to us. He's asking if Indigo Paints looks good at the current market price and if he should enter. Indigo at 1320 levels, what do you think?
So stock is in downtrend and continuously it's making a lower high lower low formation, which clearly suggests that some more weakness we can see. And now almost stock is trading near to its all-time low trajectory. So we feel that furthermore downside pressure we can witness in the near term as well as on the short term also. So until stock not crosses above 1450, 1500 zone, it will remain in the weak territory also. And our advice is to avoid at the current juncture because still it's making a lower top, lower bottom formation, and so trend is weak for the stock.
Okay, all right. So Indigo Paints also looks weak, at least in the foreseeable future. Next one is from Ashish Kumar. He's asking your view on Wipro. And another viewer, Darshan, is asking on Tech Mahindra. So if you could give us a comparison of the two and how they both stack up against each other and whether or not any of them is attractive right now.
So if we compare both the stock, Wipro is still underperforming. Yes, some buying traction has been seen on the Tech Mahindra. So if I want to take a bet on the in these two stocks, so I'll go with the Tech Mahindra because the setup looks like to be on the positive side for the near term as well as for the short term. So if Tech Mahindra manages to cross above 1110, 1120 level, then possibly stock can inch up further higher towards 1200 to 1240 zone on the higher side. But in the Wipro, again, underperformance is there. And since last couple of months, we are seeing, stock is forming lower top, lower bottom formation. So trend is weak for the Wipro. Until the stock not crosses above 425, 430 zone, it will remain under a bearish zone. And sell on rise is the strategy as of now for the Wipro. But yes, we can go with on the buying side with the Tech Mahindra for upside target of 1200 to 1240. At this current juncture, we can keep a stop loss of around 1030.
Okay, all right. Next query then from Chandrakant Thorat. He wants to ask what's a good entry point for Bajaj Finance? Right now at 6700 levels is what I think we saw last. Yes, 6746. Talk to us about where it's headed and if now is a good time to buy.
So surprisingly, we are seeing a weak trend for the Bajaj Finance since last couple of weeks, and now stock is trading near to its important support area of 200-day moving average, which is at almost at around 6700 level. So if at all stocks hold 6700 level, then some pullback action we can see in the near term basis, and then in pullback stock can move higher towards 6850, 6900, which is again a steep resistance as of now on the near-term setup. If stocks breaks below 6700 on the weekly closing basis, then possibly we can see furthermore downtick in the stock, and it may go down further towards 6600, even 6550 level also. So the stock is witnessing some supply pressure. So those who wants to buy the stock, wait and don't go in aggressive manner, buy in a staggered manner. Though it's a quality stock, but still technically the trend is weak. I'll suggest if you want to buy on a lesser risk, so wait for 6850 breakout, then go aggressively to buy this Bajaj Finance at the current juncture.
Okay. Another name from the financial space that we'd like you to address is Indian Bank. Funny is writing to us and he wants to know what the future holds for Indian Bank. Again, in tandem with the entire PSU Bank's basket, Indian Bank also saw a good resurgence last 5-6 odd weeks. Is that momentum set to continue, or do you foresee some sluggishness before a meaningful pickup happens?
Very strong momentum we have witnessed in last couple of months. Almost it's a fourth month where higher high formation is taking place on the Indian Bank, which clearly shows strength is coming back to the stock. But looking at the short to medium term setup, now stock is approaching towards its June 2019 swing high, which is at around 292 level. So if you are holding your position, if its stocks comes around 290-95 zones, book partial profit around those levels because stock has shown already a good run up in last couple of months. So some cool off action can be there around 290-95 zone because it's a multiple supply zone for the stock. So our advice to take some profit around 290 and keep trailing your stop losses higher. At the current level, we suggest you to keep your stop loss now at around 262 level.
Okay. The next one is also from the PSU basket, not a bank, but a PSU Rail Vikas Nigam. What's your view here? It's hovering at the 52-week high level.
Very strong price action we have seen during the month itself. Stock has delivered almost 83% return in this month. And looking at the price action, looking at the breakout on across all time frame, we believe that this stock can inch up further higher, and 90-95 could be the possible target in the positional basis. So those who are holding now trail stop loss at around 62 level for upside target of 85 to 90 in the continuation of this uptrend.
Okay, all right. The final query for the day is from Prabhakaran, and he's asking for your advice on DMart. Now, this one has gone in the opposite direction of where the entire market momentum lied in or has been lying in the last 1 month odd. This one has actually given up some of its gains. Talk to us about the way forward.
Yeah, so since last 3 months, we are seeing stock is witnessing some pressure, and in the this downfall, stock is now trading below all its important moving averages. Stock has given a breakdown of its 200-day moving average also. So we feel that furthermore pressure is going to remain in the stock as stock is trading below 4,000 level. So until stock not crosses above 4,000 level, it will remain under pressure, and possibly stock can show furthermore downtick towards 3,800, even 3,750, which is the next support area for the stock. Though overall long-term setup for the stock is in bullish trend, but near-term to short-term is showing some weakness. So if you want to buy the stock, wait for furthermore corrective action or wait for 4,000 level to cross, then add some position in DMart.
Okay, all right. Thanks for that. How about your own preferred picks in the market right now? Which stocks look promising?
So, Karanya, we expect L&T may deliver furthermore upside from the current level. Stock has given a strong breakout on the weekly chart, and looking at the overall structure for the stock, we feel that L&T can move up further higher towards 2120, 2140 level in the continuation of this uptrend. One can keep stop loss of 2030 to buy L&T. Another stock is from sugar space, that is Balrampur Chini. We have witnessed a strong buying action in the whole sugar space in last couple of trading session. And looking at the Balrampur Chini, we expect that this upward momentum can continue further higher towards 395 to 400 zone. So one can buy Balrampur Chini with the stop loss of 360. Third stocks which we like from the banking space, that is from Midcap Bank, and RBL Bank is showing good amount of buying interest. Looking at the daily as well as weekly chart, we expect this momentum can continue towards 165, 170 zone in the positional manner. One can buy and hold RBL Bank with stop loss of 142.
Okay, great, Rajesh. Thank you so much for flagging off all these stocks to us. Balrampur, Chini, RBL Bank and L&T, which he is placing his bets on. Thank you so much again for taking time out and chatting with us. And guys, with that, it's a wrap on Morning Trade. Thank you for tuning in.